Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking energy and talking crude oil. Crude oil WTI up 1.85% today, up near that 66 level, finishing just below that, but reaching it on the highs. Interestingly enough, Brent crude also up, but up a full 0.75% higher than the WTI contract, getting back above 77 for Brent. So that spread has widened. But back to EIA yesterday, one of the most overlooked parts of the EIA report, we saw a build in gasoline, we saw a build in crude oil, everybody knows about that. But the refinery utilization number in their EIA report jumped from 92 up to what is essentially full capacity, above 95%. Now, considering that some of the refineries were coming out of turnaround, we expected this. But if that were to be a consistent figure, that would mean refineries were pumping out at what is essentially full capacity. They can't really get to 100%. They can get maybe another percent more of product out. And then there's always rotating maintenance and parts of refineries that get shut down just for repairs and other aspects of a normal production line. So that refinery utilization number jumped from about 91.8% to over 95%. That 91.8% was 2 weeks ago, to over 95%. Now seems like turnaround is done, at least for the time being. Now, inventories of crude oil themselves, while they built in the EIA, the inventories for the crude oil are in the lower half of the range for this time of year. Conversely, gasoline is in the higher range of storage for this time of year. It's the higher end of that range. So gasoline, there is supply, but that's typical going into the summer driving season, which has officially began last weekend. Now, in terms of the 5-year range, we're right around the average of gasoline. And with refineries pumping, you should expect to see the crude oil inventories fall a little bit more, which is part of the reason imports into the U.S. actually jumped a little bit to build that supply so the refineries can kick that product out and fulfill what's supposed to be stronger demand. We'll see an OPEC meeting, or rather an OPEC report next week that'll have some things to say about U.S. demand, but we'll really talk specifically about global demand for refined products, and that will be in this conversation as well next week. And then also the spread between Brent and WTI widened back out again to over $10. That again is going to be something to keep an eye on, because the demand for WTI will grow as that spread widens. But then again, there's that factor of transport capacity for the landlocked WTI crude oil, which just is not drilled near ports like Brent crude typically is. So they're going to have to sort that out, or they're just going to keep putting crude oil in storage, and these prices will keep getting bid. This is Bob Iaccino talking crude oil from the CME Group trading floor in Chicago.